Why do divorcing spouses hide their assets? Imagine trying to solve a puzzle with missing pieces. That's what happens when a spouse hides assets during a divorce. It makes figuring out the full financial picture much harder. When couples go through divorce, they need to share their property fairly. But some spouses hide assets to keep more money or property for themselves. They want to avoid losing part of their wealth in the division process. Hiding assets can include bank accounts, real estate, investments, or even ownership in a business. Sometimes, spouses transfer assets to friends or family to keep them out of reach. Other times, they might undervalue or not report certain assets at all. This makes it tricky for lawyers, accountants, and courts to get an accurate view of what's really there. One reason spouses hide assets is to get a bigger share of the money. If they hide a large savings account or a valuable property, they can keep more for themselves. They might also hide assets to avoid paying debts linked to those assets. For example, if a house has a mortgage or taxes owed, hiding it might help dodge those responsibilities. Another reason is control. Some spouses want to control the value of certain assets, especially businesses or investments. They might manipulate the numbers or delay sharing information to make those assets seem less valuable. This way, they can reduce what they have to give up. Trust issues also play a part. Divorce often leads to suspicion, and some spouses hide assets out of fear that the other person will unfairly benefit. They might think hiding assets is the only way to protect what they believe is rightfully theirs. Certain assets are easier to hide. For example, collectibles, retirement accounts, or private business interests can be complex to evaluate. If one spouse manages those assets alone, it's easier to keep them hidden. To uncover hidden assets, professionals like forensic accountants and appraisers are brought in. They analyze financial documents, bank records, and tax returns to find anything that's been concealed. Courts can also order full financial disclosures and use legal tools to detect hidden property. Valuing assets is a key part of divorce. When assets are hidden, it complicates the process. Experts use different methods like market value assessments or appraisals to determine what assets are worth. If assets are not fully disclosed, these methods become less reliable. In the end, spouses hide assets to protect their own financial interests. This can make dividing property unfair and more difficult. That's why thorough investigation, legal oversight, and expert help are so important to make sure everyone gets a fair deal.